Second variable is policy communication. Markets do not require concrete action to change direction, but they do respond quickly to shifts in tone. Any signals that fiscal expansion will be measured, coordinated, or offset by credible financing plans would likely ease pressure. On the other hand, language that reinforces uncertainty or accelerates expectations of fiscal loosening could prolong scrutiny. Investors should pay close attention not just to official statements, but to consistency across voices. Repeated alignment matters more than isolated remarks. The third variable is cross-asset confirmation. For today's judgment to harden into a sustained trend, equity weakness would need to align with continued upward pressure on yields and corresponding shifts in currency dynamics. If this alignment breaks, particularly if equities stabilize while yields stop rising, it would indicate that the market is willing to compartmentalize fiscal risk rather than treat it as a dominant theme. Finally, flow behavior will provide confirmation. Continued gradual de-risking would support a cautious stance, while a return of selective buying, especially in companies with strong capital policies, would suggest confidence has not been fundamentally impaired. Importantly, what investors should not watch too closely are isolated equity moves or short-term technical levels. In this environment, those signals are secondary. The primary drivers are macro in nature, and their influence tends to operate over multiple sessions rather than intraday fluctuations. In practical terms, this means the market's next decision will be shaped less by what happens in any single session and more by whether these variables converge or diverge. If bonds calm, policy tone steadies, and cross-asset signals lose alignment, today's caution may be remembered as a necessary adjustment rather than the start of a deeper repricing. If not, scrutiny will intensify. That framework provides a clear lens for interpreting developments as the week progresses. That brings us to the close of today's Japan Market Espresso. Today was not about panic or deterioration, but about repricing and prioritization. The market made it clear that fiscal conditions and interest rate dynamics are now central to how Japan's economy is being evaluated. Whether this judgment hardens or fades will depend on signals from bonds, policy communication, and cross-asset alignment over the coming sessions. The goal of this briefing is not to predict outcomes, but to help you interpret what the market is actually saying each day.